Thanks for tuning in to our live weekly Facebook training where we discuss business credit building tips, tactics to get business loans and credit lines, and actionable business growth strategies. We're going live on Facebook starting in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Going live now with your host, Ty Crandall.
What's up, Facebook? Ty Crandall here, and I'm excited that you guys could join us. So today, I was out, I think, last week because I was actually out of town in Denver, but I am back, and today we're going to the chalkboard, we're going to the blackboard, and we're going to talk about SBA loans. So SBA loan is the coveted, the ultimate option of what almost all business owners want, for good reason. Because SBA loans give you the lowest payments because you have really good interest rates, really good terms, meaning that you can have longer loan terms and lower interest rates, and that gives you lower payments. So, hey, D, welcome. Thanks for coming in. I appreciate that. I'm trying this whole new Facebook like studio thing that they have out, so I will let you know how it goes, but thanks for the feedback. You also should have like a cool new icon you can use to like, which is like our logo. So let me know how it works out. So SBA loans, that's what we're diving into today. Today we're going to be talking about exactly how to get an SBA loan. Derek Harper, my good friend, just joined us. So we're going to talk about exactly how to get an SBA loan. Now, why would you want, what's up, man? Welcome. Thanks for coming in. Oh no, if he shares, we have like tons of people come in every time Derek shares. Thanks for sharing. And thanks you all for sharing. If this content hits home, if it is something that you think that other people that you know may get a benefit from, then please share yourself. It helps me out and helps make sure that we get the word out. So SBA loans, the ultimate option for business owners because you get a longer term, you get a lower rate, and that means cheaper payments. But again, a lot of this is a mystery. A lot of people don't know anything about how to get SBA loans. A lot of people don't know the steps to go in and to get approved. A lot of people don't even think they can get approved when they can. So today what we're going to do is we're going to talk about what it takes to actually get an SBA loan, what SBA is actually looking for, what the lenders that underwrite these loans are actually looking for, and we're going to talk about exactly how you can come in and exactly how you can get an SBA loan for your business. So if this hits home, if this is a message that you think that you could benefit from or anybody else, make sure you like, make sure you share as we go through this process. So let's dive in. So how to get an SBA loan. That is the topic today. And today we're going to be talking about what these are. We're going to talk about each one of the individual requirements that they actually have for you to be successful and get a coveted SBA loan. So again, when we're talking about SBA loans, what we're talking about here are government insured loans. So these are not offered by SBA. They're actually offered conventional bank. So first of all, what's a conventional bank? A conventional bank is Wells Fargo. A conventional bank is Bank of America. It's Chase. It's the big banks. The problem is big banks are basically insured by the government, right? So the government restricts what they can and can't do, and they won't let them basically engage in risky lending. So what that means is it means in order for you to get a loan through a big bank, you've got to meet special requirements. And here's how this works. SBA doesn't lend money. They have some micro loans and some smaller amounts they lend, but the most of the loans you get, they're not offered by SBA. They're offered by Chase. They're offered by Bank of America. They're offered by Regions. They're offered by Wells Fargo. They're offered by the big banks. And then SBA insures those loans. So that means, for example, if SBA insures 90% of the loan, if you borrow $100,000 and you default, SBA would pay the bank 90 of that $100,000, and the bank would only be on the hook for $10,000. Because SBA exists, it makes it where the big banks can lend money to small businesses, to you and I, because if I ever default, SBA is the one that takes the biggest hit. So because the risk is diminished because SBA insures it, the big banks can offer business loans. Why is this important? Well, first of all, you need to know if you're ever going to walk into a big bank, they're going to offer you an SBA loan. Big banks don't even lend to businesses in most cases because so many businesses fail, because the default rate is so high. So what they're only doing is using SBA insured loans. So why you need to know this and why that's important is because if you're going to go into a big bank, you're going to have to meet some very specific and very difficult criteria to be able to get approved. You're going to have to get approved meeting the bank's criteria and SBA's criteria. So you're going to have double the amount of criteria that you're going to have to meet for you to actually get approved. Now, I was just asked, this is on the right time. I have an offer accepted to purchase an existing business, and my next step is to get the SBA loan. Great. We're going to be talking about that as well. And guys, I really appreciate the shares. As you can see, Derek, and those of you that are sharing, you can see the numbers climbing, because if this information is important, we want to get the word out there. Thanks everybody for pouring in. Every time Derek shows up to my live stream and shares, things go bonkers in here. Christine, welcome. So for today, what we're talking about is the exact steps to get an SBA loan. So it's important to note here that these are government insured. They're not offered by SBA. These loans are insured by SBA in case you default. SBA pays the bank, but these are actually issued by conventional lenders, by the big banks. Now, these are typically going to take about 60 days to close, okay? They're not easy to qualify for, but remember, they're giving you longer terms and they're giving you lower rates, which equal low payments. Long terms, low rates equal low payments. So remember, a lot of financing. Hello to everybody, and thanks for pouring in. There's a lot of financing out there that's much easier to get than what we're talking about today. And if you view us and you watch here on Facebook Live, and if you don't, then just simply go to facebook.com/credit suite, go to our messenger, type in the letters EIN, and I think you'll get a free guide when you do so. And then we'll notify you every week when we go live so you can get this kind of information. So with SBA, remember, these are insured by SBA, but it's the big banks, it's the conventional banks that actually offer these loans. These are much more difficult to get than a lot of other kind of financing we're going to talk about, but this is the final step you want to graduate to. Also keep in mind, these take time to close. This can take a month or 2 months to close because there's so much documentation you're going to need to provide, and you're going to have to qualify with SBA, and you're going to have to qualify with the bank itself that's offering the loan as well. So things to keep in mind as you're getting started. Now, there are a lot of alternatives if you have cash flow, credit, and collateral. And I call this the 3 C's formula to lending. Even if you don't qualify for an SBA loan, if you have cash flow, you can get revenue lending, and you can get alternative SBA loans, and you can get merchant account financing. If you have good credit, you can get unsecured credit lines up to 150 grand. If you have collateral like 401ks or stocks or account receivables or purchase orders or any of these type of things, these can all get you financing. These are much easier to get than SBA loans because this one, you only need cash flow. This one, you only need credit. This one, you only need collateral. So when we talk about the requirements, don't get discouraged if you don't meet them. Know that there's a lot of alternative options that can work for you. So what are they looking for? Well, conventional banks want to see these things. Cash flow per your tax returns. All 3 types of credit. Did you know you have 3 types of credit? We're going to talk about this. And they want to see business and personal collateral as well. So let's dive into each one of these. First of all, cash flow. The first thing they're going to do is review your bank statements to make sure that you're managing your bank account responsibly. There's a lot of financing out there, and Denise says, your number is a scam likely. Duh. Don't take out rocket science to figure it out. I'm not sure what that means, but that's okay. So remember, when it comes to cash flow, the first thing they're going to look out is your bank accounts. You're managing your bank accounts responsibly. What does that mean? Well, 1, positive cash flow. More money going in the bank account than you have going out of the bank account. Second, they want to see good bank account management, that you're not overdrawing the account, that your non-sufficient funds are non-existent or very, very low. Okay. They also want to make sure that you have, if possibly, even different accounts with the bank other than your main bank account as well. Okay. So that being said, don't speak intelligently. Do not comment. Keep moving, please. All right. I appreciate that, Derek. Okay. So that being said, when it comes to cash flow, what they're typically looking at, a bank account for responsible bank account management. The second thing they're going to look for is 2 to 3 years of tax returns, typically 3 years of tax returns. And here's what they're looking for tax returns. 1, they're asking for 3 years of tax returns for a very good reason. They want to make sure you're in business for 3 years. A business that can't provide 3 years of tax returns hasn't been in business for 3 years. So a lot of the banks, they require you be in business for 2 to 3 years to get an SBA loan. By requiring 3 years of tax returns, you can only supply it if you've been in business 3 years. When they get those tax returns, here's what they're looking for. Increasing revenues year to year, that your revenue's higher year to year, showing you're growing, and profits. Here's where so many business owners screw up. So many business owners listen to their accountant. They spend a bunch of money at the end of the year. They write off everything they can so they don't have to pay taxes, and they basically show no profits. The problem is, even $5,000 or $2,000 in profit in my world, in the commercial lending world, is completely the difference between you getting approved for credit lines and loans and getting denied for credit lines and loans. You have to show some profits on your tax returns. The whole world of lending opens up to you business-wise when you do, okay? And so it's important to know that you've got to come in, you've got to show some profits. Now somebody's saying, how much? Well, it depends on your business. But the key is, are you profitable or are you not? If you're not profitable, a lot of lenders, a lot of credit lines, a lot of loans, a lot of alternative lenders that will give you money won't give you money. But if you show even a little profit, $2,000, $5,000, $10,000, depending relative to the profits or the revenues, then that is the key to being able to get a lot of loans, including SBA loans. So what they're looking for here is, 1, do you manage your bank account responsibly? 2, do your financials and bank account show that you have enough money to pay back the loan? It's what all lenders care about most. 3, again, when it comes down to banking account, but to tax returns, are you growing the business? Are your revenues increasing? Are your revenues on your bank statement increasing? Are there profits on the actual business? If you have those things, you're meeting the requirements of what they're looking for with cash flow. Whatever it is, I don't have it, that's okay. Look, Cheris, that's okay. The point about SBA is where you want to graduate to. If you know the end goal in anything in life, it's easier to get there. So the end goal, by knowing what it requires to get approved for SBA, you can work on that while you're getting approved for a lot of these alternative financing programs that are much easier to get approved for. So again, this is what you want to work towards. And in doing so, a lot of other funding will open up along the way. And you'll eventually, even within years, as several of my credit repair owner friends have done, been able to come in and get the SBA loan with the absolute terms. So remember, they're looking for cash flow. They're also going to want probably a profit and loss statement, a bank account, a balance sheet. They're also going to want projections of what you expect to do in the future. What they're looking at here is 2 things: past performance, future potential. So they're going to want that profit and loss, which shows the difference between, again, your basic revenue and your expenses, and the difference between the two. Are you making money or losing money? The balance sheet, the kind of money that you have available now. The projected financials, what you expect to do in the future. What's your past performance and what's your future potential, okay? So, being said, I see a lot of people mess this up. A lot of people don't understand this. They think that banks lend money based on what they expect to do. We're entrepreneurs here. Nothing works out like we expect it to. That's why banks lend money based on what's happened in the past, not necessarily what you think will happen in the future. So your past performance matters a lot when it comes to getting any kind of loan, especially SBA. They're going to look at your profit and loss, where you are now. They're going to look at the bank statements, the tax returns. They're going to look at the income statement. Then they'll look at the projected. They want to see you have some kind of idea where you're going in the future, but they're mostly going to look at past performance, not projections of what you expect, okay? And Derek, I appreciate that. Ty's helped me get funding when I didn't think I had the ways. This is why I always endorse them at Credit Suite. I really appreciate that. And guys, we're going to talk about a lot of different ways that you're going to be able to get funding here on these live streams. Credit. So in order to get it, remember, you need 3 things to get an SBA loan. Cash flow, you're going to also need credit, and you're going to need collateral. You're going to need these 3. So when it comes to credit, business credit in your business name. So here's how this works. Okay, you come in, and SBA loans, they use something called the FICO SBSS score. This is FICO's small business score. FICO's SBSS score, you must have a 140 score to get approved. 300 is as high as it goes. To get any SBA loan, 140 is the minimum. Since it's SBA's minimum, a lot of banks require a 160. Why does this matter? It's very simple. It is 100% impossible to get a 140 score with SBA's FICO SBSS or with FICO's SBSS unless you have business credit established. You have to have it. You can't come in and you can't get SBSS FICO score high enough unless you build business credit. So you have to build business credit to ever get an SBA loan. If you have no business credit, you absolutely cannot. It is impossible to get an SBA loan. Now, Terry says, what's the difference between FHA loans and conventional loans? Well, That's a whole different topic because now we're talking about mortgages. Okay, an FHA mortgage is basically the same thing. FHA is insuring the loan in case default. So since FHA is taking the risk that it allows banks to basically more leniently lend money, the same here as we're talking about with SBA. Christine, almost 1 million and mostly no PG accounts. And Christine is one of these people that follows us religiously and's got almost 1 million, just short, about 900,000 now in business credit, building you without a personal guarantee and without a personal credit check. So that's the first step. You got to make sure that you have business credit established. Now, the second step, you've got to make sure that you have good personal credit. It's based on, again, you as the business owner, your ability to pay. So guys, you have to have good personal credit and business credit. We've seen customers with 780 FICO scores get denied with SBA because they had one derogatory on a major bank account. So you need to have good consumer credit. You need to build your business credit and have good business credit. But here's the kicker. With SBA, you also need something you don't need with alternative lenders, which you also need good bank credit. Okay, so you're going to need good bank credit as well. Now, bank credit is the third type of credit that most people don't know about. Most people know about their consumer credit. Some know about business credit. Most don't know about bank credit, and here's how it works. It basically is looking at the 90-day balance of what you keep in your business bank account. So here's how it works. Completely secret, completely on the down low. You'll never know what your bank credit score is. They'll never tell you. This is an internal credit score that the banking system uses that whenever your business goes to get a loan or a credit card, they use to determine your worth. Should you be lent the money or should you not? It's a 5-category system and you only care about 4 and 5. You'll either have a high 5, mid 5, or low 5, a high 4, mid 4, or low 4 score. Here it is. Cut and dry. It's based honestly on the average balances in your bank account. Some other factors as well. You need to keep $10,000 on average in your bank account for a 90-day time period before you'll have a low 5 score, which is the lowest acceptable score. It's all you need to know. Under 10 grand, you'll be in the 4s, you can't get a loan. The highest they go is 70,000 or more in your bank account. You've got to have an average for 90 days of 10 grand in that business bank account to ever get an SBA loan because you'll need it to get that bank credit score high enough. Why I tell you this? Because if you're going to get an SBA loan, now you know what to do 90 days before. You know to make sure you have that much money in there and then keep that much money in there. And in doing so, that's what you'll need to actually be able to qualify for an SBA loan. You need good personal score, business score, and bank score. Now, there are other factors here that affect the bank credit score, okay? Having the positive cash flow, consistent deposits, okay? The age of the bank account, having other products with the bank, money market accounts, for example. All these things tie into it, but it is primarily based on the 90-day balance that you keep in that bank account. Okay. And Nicole says, I just want to know this, but what do you do if you get scammed trying to get a card online for a bank card? Well, it depends on what kind of scam. You know, you've got to try to go back to get your money, and it depends on what kind of scam. But you want to involve the Federal Trade Commission and maybe some other regulatory agencies depending on what kind of scam it is. Do you recommend PGing for an SBA loan? Yes, you have to, unless you build business credit. A lot of people ask me about building business credit and getting no PG credit. Christine is with us today. She just said she's almost at $1 million in credit that she's got without the personal guarantee and the personal credit check. She has so much credit built that it's easier for her to get some loans without the personal guarantee. But until you build a lot of credit, you're never going to get loans without a personal guarantee. So you have to build your business credit to get away from the personal guarantee, and all SBA loans are going to be personal guaranteed. Eventually, as your business grows, you'll be able to get more loans without a personal guarantee. It's very easy following the formula that we teach to build business credit without a personal guarantee, but it's harder to get loans. So remember, guys, if you're interested in knowing how to get business credit, go to our messenger on Facebook. I'm pretty sure you could type in the letters EIN. That'll notify you when we go live again, and you'll also be able to get a free guide right through there to be able to build your business credit. Hopefully that answers your question. So we now talked about cash flow. We talked about credit. Let's talk about the third component, collateral. SBA wants collateral equal to the amount of the loan that you're taking out, or pretty close to. They'll take all of your business assets as collateral, account receivables, inventories. They'll also look at your personal assets, 401k, stocks, bonds, a home. Several interesting things on here. First of all, you need to know that account receivables is the most popular and biggest asset that is used to get SBA loans. What does that mean? It means let your customers pay you through payments. When your customers agree to pay you $1,000 and pay you $100 a month until that $1,000 is paid, that's account receivables. Account receivables have substantial value when it comes to your ability to get loans. Substantial value. So just by letting your customers pay you on payments on terms, one, you can report that to the reporting agencies if they're businesses, or in businesses you can report to their business reporting agencies. And the second thing is that you also have this benefit. Okay, you need to know that when it comes to coming down to have collateral, account receivables is the most valuable asset you have. Letting people pay you through payments, inventory, equipment, or other receivables, purchase orders, that maybe you have purchase orders. Anytime that somebody owes you money for anything, or you have an asset that serves as collateral. Second thing that's interesting, SBA is the only loan type I've ever seen where they can use a home as collateral for a business. What SBA's underwriting guidelines actually show is that they're required, the lender, to take all business assets you have as collateral, and if it's not enough to cover the loan, also take all of the personal assets they can as collateral, including your home. That's the problem with SBA. You got to pledge your home to be able to get approved. You just need to know that going in. Now, if you have enough account receivables and other business assets, your home might not be needed, but you're going to need to have substantial collateral pretty much for what you actually need to get the loan for. So here's what's interesting about this. With SBA, you need all three of the 3 C's formula. Again, I call it the 3 C's formula because to get alternative loans, you only need one. If you have cash flow, 5 to 10 grand a month, you can get all kinds of lending options through revenue lending. If you have good credit, you can get up to 150 grand in credit lines. Okay, if you have some kind of collateral, you can get money. You only need one, you don't need the others. That's the 3C formula. If you have cash flow, you don't need good credit or collateral. If you have good credit, you don't need cash flow, you don't need collateral. If you have collateral, your credit doesn't matter and your cash flow doesn't matter. You only need one. SBA is the only loan type that requires cash flow, credit, and collateral. It's all got to be good to be able to get approved. So remember, you got to have those bank statements. You got to have those tax returns, revenues increasing, profits. You got to have good business credit, good personal credit, good bank credit. Then you have to have collateral as well. Now, again, they're going to want you to, show the solid cash flow to repay. This is the biggest aspect of any loan you ever get. Do you have enough money to repay the actual loan? Okay. Credit worthiness. Does your business credit and consumer credit show that you're paying on time? Does your bank credit show you have enough money in the bank account to repay the loan? Okay. Experience in the industry. They're going to ask you to submit a resume, and they're looking for expertise of running that kind of business. Here's something important. When it comes to line items on applications, every one of them means something. So you have to know this. When they're asking for something like a resume, there's a reason they're asking for it. They're looking for your experience in your industry or field. If you don't have a bunch of experience, they want you to have a business partner that does. And thank you for the likes, thank you for the loves, and thank you guys for the shares. It means a lot that you do this, so I appreciate it. How do you build business credit? That's a whole different other topic than we're talking about today. But if you go to facebook.com/credit suite, you go into our messenger, you type in the letters EIN, I'm pretty sure that's going to trigger where you can get a free guide that'll map out the steps to build business credit. And on our Facebook page, you'll see a recent video we just did, I think about 2 weeks ago, that map out the steps to build business credit. And we will be back to that topic, but it won't be for a few more weeks. Okay, so some other tips here. You need a solid business plan. They're going to ask you for a business plan. Business plans aren't needed for most alternative lenders, but they are for SBA. And look, to be honest with you, you should probably have one. Here's why. Business plans talk about your market. It talks about your projections. It talks about competition. It talks about what you think you're going to do and sell and how much you're going to do and sell of it. That's important. You should know what your goal is in your business, and then it's easier to build towards that goal. So I think every business should have a business plan, because by doing so, you're showing that you know your market, you know your competition, you know your product, you know how much you're planning on selling, and those type of things are only going to help you running a business. But it's not needed with most kind of loans, but you will need one for SBA. Okay, and they're going to also want to see the financial, the time and business information for the business, etc. Okay, they're going to want to show you have that solid cash flow as we talked about per your bank statements. Okay, they're going to want to see resumes as we talked about, profit and loss, annual financials, cash flow statements, all of which we've talked about, bank statements showing those trends. Bank statements show month to month how your business is growing. Tax returns show year to year how your business is growing as well. You can easily Google SBA checklist and it'll even give you a list of all the documents that you're going to need. So tips, only apply with established business credit and good personal credit. Remember, the third type of credit they look at is bank credit. Don't even apply unless you've kept $90,000 or $10,000 in your bank account for the last 90 days. Build a bank relationship first. Look, if you have a relationship with the bank, it's only going to okay, and Michael says, what if you use your business checking to pay your car note? Would that be considered a business expense? Well, yeah, it could be, but my advice is to get a car in the business name. Look, it's super simple. When you get a car, to just ask them, can I get this in my business name? They'll ask for your EIN, you give them the EIN, and they'll add it, and it's in your business name. They'll typically report it to the consumer reporting agencies, but you can do it. As you build business credit and have 14 accounts reporting, you can also go to Ally Financial, Ford, and GM and get auto vehicle financing in your business name without a personal guarantee, without a personal credit check. So you could get it without a PG and credit check completely in your business name where it reports to the business reporting agencies, or just give them your EIN if you don't have business credit and they'll put it in your business name. That is really simple to do. Building your business credit to get it without the PG takes a little bit more work. But yes, if it's coming out of your business bank account, it's going to be considered a business expense. Okay, so get your docs ready in advance. This checklist, if you Google SBA checklist, you will get a good checklist of all the documents that you're going to need. Some kind of summary here: balance sheet, profit and loss statement, tax returns, resumes for everybody that owns 20% or more of the business, SBA's actual loan application. Those are going to be a consumer credit report or your social, anything to do with your business credit that you have, anything to prove your assets. Those are going to be some of the basics that they're going to look for. So get that documentation ready first. Does this work for music business? Yes, it works for every business except for high-risk industries. SBA will make it tougher to get approved with some high-risk industries, such as financial services, but you can still get it, okay? I have friends in credit repair that have gotten SBA loans. So no matter even what industry you're in, you have the ability to get SBA loans as long as you meet the requirements that we've been talking about today. Okay, another tip. Expect longer closing times. These will take longer to close than normal loans. These are ones you need to get started with well before you need the money. And again, if you have questions along the way, go to creditsuite.com/get-funding. This is the hardest kind of loan that you're going to get. We have a lot of other kind of financing, even as a startup or with bad credit, that you can get approved for. Something else is that if you have any other questions, and we can help you along the way as well, give us a ring. Okay, the way that our program works, or what we help people comes to funding, is this. We call it graduation. We start you with the best loans you can get right now. That typically starts with revenue lending based on your revenue, or credit financing or unsecured credit lines based on your credit, or collateral. We get you the easiest that you can get now. Okay, remember the 3 C's formula, super simple. We get you financing you can get now based on one of these strengths. As you add a strength and get 2 of the 3, let's say you have good cash flow and good credit, that then ends up this even more, okay? This is awesome. Priscilla, this is a scam. First of all, that doesn't even make sense, nor is it proper English. Second of all, please explain how SBA loans are a scam. I would love to know. So when you have 2 of the 3 C's, like cash flow and good credit, then what happens then is you can get even more financing, even more alternative lenders, even more term loans, even more lines of credit from alternative lenders like Lending Club, for example. And then when you have all 3, cash flow, credit, and collateral, all 3 of those, that's when you get an SBA loan. We call it a graduation. You start with one kind of financing you can get, either cash flow, credit, or collateral. Then you get 2 of the strengths, let's say cash flow and credit. Then that gets you term loans and lines of credit and more financing. Then you get to the third type of financing, the graduation, the final result, which is SBA loan that wants you to have good credit, collateral, and cash flow. So again, that's how SBA loans work. Now you know it's based on you having cash flow, credit, and collateral. We talked today about how they verify cash flow, how they verify credit. We've talked about the kind of collateral they want, what they're going to use as collateral for. Okay, so all of those type of things are what you need to know to be able to successfully get an SBA loan. Don't have them? Don't worry. Remember, to get money, all you really need is a strength. Good credit, so 680 FICO score or higher gets you credit lines. Cash flow, $5,000 to $10,000 a month will work, or some kind of collateral, account receivables, inventory, purchase orders, 401k, stocks, etc. If you don't have any of those, that's when you want to build business credit. When you build business credit, you can get these kind of approvals without a personal guarantee or personal credit check. Andrew says, can you call me directly? I want to work with you. Absolutely. The best thing to do is two things. Email us, info@creditsuite.com. That's my email, info@creditsuite.com. Or go to Messenger right now. And on Messenger, that you want to work with us, we'll engage with you there. Either one of those will work. Okay. Priscilla, you're not popular today, apparently. His status is the real estate deal. People, no scam. Okay, so if you don't have one of the C's, that's when you go to business credit, guys. With business credit, you can get approved regardless of cash flow, credit, or collateral. It's the only financing you can get when you have none of those three C's. And it still is very rewarding. As Christine on here said, she's got almost $1 million of this kind of credit. $20,000, $30,000, $40,000, $50,000 credit lines at places like Ford and Home Depot, Lowe's, Office Depot, Staples, Chevron, Sunoco, Sam's Club, Apple, okay, PNC Bank, etc., etc. So I've just given you a way that anybody can get money. If you have cash flow, credit, and collateral, you get SBA loans. If you have cash flow and credit, two of those, you get term loans, lines of credit. If you have just cash flow, just collateral, or just good credit, those get you money. And if you have none of those, that's when you build business credit. If you guys want to learn more, go to facebook.com and go to facebook.com/credit suite. Engage with us on our messenger. Type in the letters EIN if it works like it should. That'll give you the ability to download a free guide, and we'll notify you when we go live. Okay, here's the type of topics that we talk about. How the 3 C's formula really work. How all types of your credit really work. We talk about your business credit reports, all aspects of how they work. We talk about how business credit works, the benefits of business credit. We talk about your business credit scores. These are the type, we talk about the steps to build business credit. This whole is surrounded by whiteboards and chalkboards to teach you all these kind of lessons. The bottom line is that our stream is all about how you get money to fund a business no matter what your scenario is. So if that's something that interests you, go to creditsuite.com or facebook.com/credit suite. Engage with us in Messenger. Type in the letters EIN. I'm pretty sure that will get you a free guide. And then you get a free guide on building business credit, and we'll notify you when we go live again. Great information. I appreciate that very much. Comedian, I love that. Facebook.com/credit suite. Comedian, thank you very much for putting that in there, man. That's awesome. I applied for Best Buy and Apple at their stores. Haven't got a call back from them yet. You might want to apply online with them, but it might take you 30 days to actually get a response. But good class. I appreciate that. Truly. Okay, got it. Thanks, Trina. That's good for you. Okay, so everybody, I'm out of here. Thank you for liking. Thank you for loving. Thank you for using our little icon thing. Thank you guys for sharing this. It means a lot. I gave you an overview of what we'll be talking about in the weeks to come. Unless I'm out of town, we go live every Wednesday at 4 o'clock Eastern. Thank you all very much, especially Mr. Derek Harper for sharing, because when Derek comes in, I go from like 20 people to like 200 people overnight. Thanks, everybody. I'll see you here in the weeks to come next week, Wednesday at 4 o'clock here on Facebook. But the only way you're going to get notified is if you go to where Comedian actually typed that in, facebook.com/credit suite, type in EIN and Messenger, get on our list to get notified, and then we'll also get you a free guide on building business credit. Thanks, everybody, very much. Have a great day. Oh, Derek. Family. Yes, that is right. Thank you for that being the final comment. I appreciate it, man. Thank you very much for the share. Thank you for coming in. Thanks for tuning in the whole time. I know you're a busy man, and I look forward to seeing you this summer where we're we'll be co-speaking at your Credit Repair University events, which are awesome, by the way. And if you guys aren't attending Credit Repair University, you're not going to see me and Derek in the same place. So make sure you get on board and see us in Miami, and I might be at some other locations here to come too. So thanks, everybody. I look forward to seeing you next Wednesday at 4 o'clock Eastern here on Facebook Live. Thanks, everybody. Have a great day.
Please like and subscribe to get Credit Suite on Facebook for more live Facebook weekly training on getting money to grow your business and other business growth strategies. And don't forget to grab your free 4-step business credit building guide at creditsuite.com/Facebook.